Hey everyone, welcome back. My name is Zane and this is Altcoin Disrupt. Today we'll be having a look at Credo. So Credo is a radical new infrastructure and it's unlocking value across the multi-chain universe. Credo is retroteching digital asset ownership and blockchain connectivity, a radically new approach to bring liquidity and capital efficiency to the blockchain economy. Now Credo has pioneered the first decentralized trustless multi-party computational custodial network. This advancement enables Credo to offer decentralized custody, native cross-chain swap, and cross-platform liquidity access. So the mission of Credo is actually quite simple, and I quite like that they've made it this simple. So Credo works at the cutting edge of cybersecurity and blockchain, which is good, because that's security and it's integrated into the blockchain. Now, by utilizing the latest innovations in cryptography and distributed ledger technology, Credo delivers a powerful global network for securing and trading digital assets. Credo's mission is to build a decentralized infrastructure for pioneers and visionaries, making an open network for everyone. So the first thing I'd like to have a look at is the core functionalities of Credo. Decentralized custody with control. That's self-managed and third-party custody. Corporated authorization and hierarchy controls. Multi-asset fund management and DeFi dashboards. And that's all in its decentralized custody with control. Now that's one of its core principles, it's one of the core functionalities, and it's what's going to make Credo unique. So let's go on to the next thing. So the next thing is decentralized settlement and RFQ. What does all of this mean? This means it will have cross-chain native swaps, instant transfers, automated net settlement, P2P, P2Pool trader chat, liquidity pool access, and of course, native cross-chain AMM. Now in third, it gets even more deeper into decentralization. Decentralized compliance. That's all about governance and control, am I right? But it's also decentralized. So just how controlling can it be without being too controlling? So in functionalities wise, decentralized compliance, it simply means travel rule compliance, automated and customizable reporting, immutable record keeping of transactions and messages, audited, verified, and ensured. Immutable record keeping of transactions and messages. It's kind of like how the blockchain holds information without revealing it to certain parties, however, at the same time confirming that the information is correct. Credo is designed to include a user-centric incentive structure that economically favors the participants of Credo network, driving user adoption and utilizations of the network. So the design takes into consideration the incentives required for each participant to drive a network effect. Now in terms of QRDO, that can be staked with validators and staking yield that can be also earned. Unique to Credo, uninvested QRDO are automatically staked and accrued staking yield. And this is where it gets interesting, guys. This is where it gets fun. This is where it gets exciting. Transaction mining. Up to 100% QRDO. Up to 100% QRDO rebates per transaction to incentivize usage of the Credo network. That's incredible. That's transaction mining. That's incredible. And I really want to know more about this because I bet this can get a lot more complicated. The next thing is custody mining. Inflation-based reward mechanism rewards users for holding assets within the network. And I think that sounds quite similar to Algorand. I don't know if you guys know about the Algorand token. It basically rewards you for holding the token. You don't actually have to stake it. Simply holding the token, you're automatically going to earn interest. You're automatically going to earn staking rewards simply by holding the token. Usually with tokens such as Tezos or Ethereum, you have to have the token a certain amount and then you have to stake it on a specific site. However, by the sound of custody mining, it sounds like It sounds like users simply holding the assets within the network will be able to earn rewards. It just sounds a lot more easy and a lot more straightforward. I don't know if I'm correct, but I hope I am. This is just based on my observation and my research. So let's get to the part about validators. I know you guys are probably waiting on that because validators are extremely important to every crypto assets and its network. So for validators rewards, high rewards model. Derived from transaction fees payable in Qredo tokens. So that's good. That does sound like how most cryptocurrencies work anyway. It basically rewards the validators with those specific tokens, with the native token of the network, which is good. Because in return, simply by those validators earning those tokens and holding them, they will automatically earn rewards again. Now, how about liquidity mining? Now this is where a lot of people might be fascinated by, because we all hear about liquidity all the time, all over the internet, all over the cryptocurrency community. So liquidity providers pay no fee and are rewarded in L1 and Qredo tokens for provisions of liquidity. That's brilliant. So if you provide liquidity, you'll be rewarded in L1 and Qredo tokens. So to some more important news, token sale of the Credo token. Now there will be 2 token sales on the same day, July the 8th, and we're not too far away from that. This video is being recorded on the 3rd of July. Hopefully I'll be able to upload it today. Not 100% sure, but I'll try my best. So it seems like you will have time to register for the sale if you choose to. However, I must state that this video is not financial advice. This is just for educational purposes and entertainment, So yeah, both sales will be both sales will be held on the same date at different times. First sale will be 17 hours, 1700 UTC time, and 2300 UTC time. Not a huge difference, like a 6 hours difference. But again, the first sale might last for a number of hours, and the second sale is probably be the same. And they make it clear that in the first sale, it's between $100 and $500 minimum buy-in. And of course, the second sale, it's $100 and $1,000 maximum buy-in. And the percentage of token supply is 3% in the first sale and 1% in the final sale. And the number of tokens that will be available to be purchased in the first sale, 30 million. And as for the second sale, 10 million. And they're priced differently. So the second sale will actually be around half the price of the first sale. Now, I don't think I need to mention to you guys that getting into these sales have proven to be very difficult. Like, there seem to be hundreds of thousands of people who always want to buy these tokens because they consider new, cheap, and they could skyrocket in price at launch. There's no guarantee, but it's one of the things that people do in the cryptocurrency community, even if they don't believe in a product. So this obviously makes it very difficult to buy these cryptocurrency. But yes, as you can see, first token sale will be priced at 50 cents. Second sale, 22.5 cents. Second sale, 0.22 cents. Now, one final note, the first sale tokens will be locked up for 2 months, while the second sale tokens, these will be locked up for 6 months, which means that you won't be able to use your tokens for up to 6 months. And of course, let's not forget the weekly linear release. That's a 12 months weekly linear release, by the way. So let's just touch on the tokens distribution, because this can be quite fascinating, to be honest. Private sales will be 7.2%, and I think they've already held a private sale. Now the public sale is what we're in for. That's 4%, including the first sale, which is 3%, and the second sale, which would be 1%. And all the tokens that will be up for sale is around 11%. Team will get 22%, advisors 3.7%. Investors are getting a huge chunk of the deal. They're getting 34%, and that's mostly because they're investors. No one's going to invest in these companies unless they're going to get a big portion of the pie. Credo distribution, 10%. Initial validators, 4%. Ecosystem, 11%. And it goes on. Treasury even gets 3.7% along with reserves. On one final thing, strategic partners building applications on Credo. Important to note that there's actually Coinbase that is building application on Credo. or possibly partnered with Credo in a different way. Now, the Credo network actually went live in November 2020. Now, this is Credo mainnet, and that was live. Now, since then, the network's effect has continued to take hold. Credo has onboarded asset managers and hedge funds, partnered with Durbit, Celsius, and top-tier PMS HedgeGuard, and attracts partners from some of the biggest names in cryptos. Credo is standing by ready to welcome new members. So this is quite exciting that they're always looking for new partners and to grow their business and to grow Credo. So here's another lovely explanation of how Credo fits in with other cryptocurrencies such as Ren or Keep or Thorchain. So as you can see, these are some of the cryptocurrencies that are cross-chain protocols. These are the cryptocurrencies that are MPC tech custodial services. Because almost every brilliant cryptocurrencies in the crypto space is a risk. They all took risks. Bitcoin was a risk. Ethereum was a risk. Litecoin, risk. So many brilliant cryptocurrencies that are all risk. Because most people don't even know what cryptocurrencies are. And some people who do know what cryptocurrencies are don't even know what cryptocurrencies will be in the next 10 to 20 years because simply it's not regulated. So Credo technology, Credo has built the first decentralized trustless MPC custodial network. So this allows Credo to deliver fast, low-cost native chain swap and settlement. Credo bridges the multi-chain universe with cross-platform liquidity. And these are the pillars of innovations in terms of Credo. That's fast finality blockchain built on Tendermint, a fast finality consensus engine that tuned to handle thousands of transactions per second. It's a layer 2 state chain that records and transfer assets ownership across different layer 1 blockchains within the Credo network. Now there's also Consensus MPC network. That's a next generation consensus driven trustless MPC network, and that connects to layer 1 blockchains with the goal of eliminating digital assets theft. Now, this is brilliant. So there's also programmable governance and workflow built into the security for institutional trading, as well as access to DeFi smart contracts with maximum security. So I've got plenty of information on Credo, but obviously Credo network explained by itself. They explain the architecture from layer 1, that's around the blockchain, and layer 2 is around the Credo blockchain. Now layer 3 gets even more interesting, Credo decentralized messaging. So this was my video on Credo. Hope you guys have enjoyed it. Like I said, it's still in development. It's not publicly traded yet. So obviously data and everything is still unavailable. But for the most part, I hope you guys have enjoyed this video. Subscribe, leave a like, leave a comment, and I will speak to you guys in the next video.